righty. So how to reduce losses and book profits consistently swing trading futures. We've been doing this long time. Started out with options, transition to Forex and futures, and then back to, we had done Forex for quite a while, and then back to futures once we had available to us the micro future. That's about 2019. The margin had just gotten too big for the trade the futures for us, so we needed like a boatload of money to swing trade. So that's why we had switched off to Forex for a while, and then we came back to futures after we had the micros available to us. So with more realistic size accounts, you don't need over $100,000, $200,000 to swing trade the futures. If you have the micros, then you can, with a couple thousand to 10, 20, 30,000, you can trade very effectively without needing a huge account. All right. So disclaimer, everything we're talking about today is purely for educational purposes only. All right. So in a second. So anything we do is for educational purposes only and not actual trading advice. So what we're going to show you is how myself and Becky, who's the co-host and also my trading partner, how we profit from the markets, have been profiting from the markets, how we do it consistently. Also talk about how we used to blow out accounts, over leverage, and how the approach right now is basically the end game. We've already gone through all the steps. We've gone through the ups and downs. We've gone through the swings. We've gone through the highs and lows. We've blown out multiple accounts. We've done all the wrong things, and we've come out the other side where we're now doing the right thing, where we are trading in a very business-like, professional manner. I see, Connie, can you go get a little extra sounds? I went ahead and mute you. There was some little background noise there. So, but we've come out the other side, and so we'll show you how we approach the markets now with futures. And right now, futures is probably 90 to 95% of what I personally trade. There are certain times when I focus on options. The majority of the time I focus on the futures because the futures give me the most consistent profits and in a very predictable amount of money each month and each year that I can rely on. Options is not as profitable. Futures are very profitable if you follow a plan in a very risk-defined and business-like manner. And that's what you're going to get a taste of this afternoon, how we go about doing that. All right. These are the only futures contracts we currently trade. Australian dollar, British pound, Canadian dollar, euro, S&P, the ES, NASDAQ, NQ, Russell futures, Swiss franc, and the Dow futures. We used to trade more. We used to trade more commodities, but as time went on, we found that the more you trade, it doesn't translate to making more money. When some of the people we've talked to, traders we've talked to, learning from other people, when we become more focused and specialized is when the profits really come. It's nice to be able to trade this and that every which way, get some gold, what? That's all sounds really great and good, but it creates additional complications that are unforeseen until you get into it. With this grouping here, because of the micros being available, and the key is the micros are available to us to trade on all of these contracts. So we can control our risk from $100. We can trade some of these, all the currencies we can trade for $100 risk per contract. So we can trade as big as we want or as small as we want. We can trade a $4,000 account. We can trade a $20,000 account. We can trade a $50,000 account. We can trade a $100,000 account, $1 million account, exact same strategy, exact same approach. So it's very scalable. And that's what we really like about it. So as I started coaching more people, we've kind of found the sweet spot so everyone can trade these regardless of the size account they have, and they can be comfortable working with these strategies, with these contracts. And as long as you follow the rules and do it pretty much the way I tell you to do it, it works out beautifully, okay? So let's scroll down a little bit. A little bit later, we're gonna go through an example of one of the strategies, and we'll take a look at that a little bit later on. In your handouts also is a listing of trades for this one particular strategy over the last 20-something years, all the trades for the currency futures. And you'll find me focusing on the currency futures more so than index futures or anything else, because the currency futures, much like the Forex I showed on the screen earlier, are extremely the most easiest thing to trade, swing trade, not day trade, swing trade, and the most consistently profitable, period, okay? And let me show you, before we even get going, I want to throw some numbers out there. But I need someone to get a calculator. So I'm going to ask you to do some numbers for me. So someone pull out a calculator, or a couple of you pull out a calculator. I'm going to sum up out the way we trade really, really, really fast, okay? I need a calculator. I'm going to ask you to do some numbers, okay? Let's say we take 20 trades, and on each trade, we risk $1,000. Okay, every trade, if it went horribly wrong, we will lose $1,000 in each of the losing trades. Okay, now, if on those 20 trades we have 3 losses, how much money are we going to lose? In 20 trades, we have 3 losses. How much are we going to lose if we're risking $1,000 per trade? Type in a number for me, please. We're risking $1,000 per trade, and we have 3 losses. What's that negative? How much is that loss? Total loss in 20 trades. If we have 3 losses, risking $1,000 per trade, obviously $3,000. Okay. Now, on the low end to average, our low end minimum profit at the low end, on average, right at the low end, is a 40% return on a winning trade. So if on the other 17 trades, 40% would be $400. Let's say on other 17 trades, we make at the low end $400. What is 17 times 400? Type it in, 17 times 400. 6,800. What is 6,800 minus 3,000? So that's $6,800 made, 3,000 lost. What's the difference between 6,800 and 3,000? 6,800 minus, that's how we trade. That's literally how we trade. That literally sums up how we trade. We have, it'll never be exactly $1,000, okay? It'll be around 1,000, but the percent return will still average at a low end on profitable trades about $400, about a 40% return. Usually the range of first target profits ranges from around 30% return up to 50 to 60% return at the first target. That's low end first target profits. If you want more, then you have to manage positions, take partial position off at the first target, trail stops. Basically, you want more money, you have to be able to do more work and be willing and able to do more work. But this is how we trade. And since it's 100% objective, technical only, we don't do any looks like, feels like stuff. It's all pure technical. We maintain a solid 85% or higher win rate on our futures trades. So when I said 20 trades, 17 wins, 3 losses, that's 85%, okay? That's 85% wins. And that is how we trade. So when we place trades, this is our expectation of profitability. This is repeatable, verifiable. You can back test this all you want, and you can see it comes out. And we don't just back test, we forward test, meaning we actually trade the strategies live for year after year after year, so we know they work, okay? You can't just make up a strategy, back test it for a year or two, and say, great strategy. No, I've had people come to me and because they know I'm a technical guy, and they'll have a strategy for me to review, and they'll say, came up with this great strategy. They tested it over the last 5 years. It has 90% wins. It's a long only strategy, which is fine, long only strategy over the last 5 years. And then, okay, so I look at it and I say, okay, so during the last 5 years, the market went up and up and up and up. So your long strategy worked really, really well, didn't it? And they're like, well, yeah. So then I'll have them go back more years, which involved a whole lot of bearish market times, and then their whole strategy falls apart. That is why we don't just back test a couple of years. We got to go back way further, way further. When we did our Forex analysis, we went back to 1995 is where all analysis started from. And our futures go back 21 years. So it has to be able to hold up through the good times, the bearish times, bullish times. You can't have your account wiped out on a bullish strategy by the market going down, and you can't have your account wiped out on a bearish strategy because the market keeps going up. So the strategies have to, and your risk, everything has to work together for long and short strategies. And that's what we've done. Like I said, this is our end game. This is what we've come up with after learning from many, many, many people. Personally, I put in probably 25 to 30,000 hours of analysis time, trading time. Becky's put in many, many hours, many hours. I don't think it's quite as many as I have. Because I was obsessed with it. I would work 40 hours a week at Lockheed and then come home and work another 60 hours a week on my own trading. And that's how I got really, really good at it. Eyes on the charts. I can see the charts and I can recognize what's going on. So let's go to, this is going to be coming up. This is our independent special, basically. So you'll see it in the handouts. And so this is probably the biggest discounts I've given in quite a while, but it's coming up for Independence Day is in 2 weeks, July 4th, so right through July 5th. Be aware of this coaching specialist in the handouts and also on our website. I'm going to switch over to my website because I want you to see something I wrote on there because it's key to what we do. All right. Okay. Here's my website. You'll find the valid trades listing here on the handouts and previous handouts, and also some videos, so on and so forth. On my homepage, I have a bio, and this is an important line right here. Okay. With one-on-one coaching, we can help to reduce the learning curve from 2 to 4 years down to 6 to 9 months. Okay, it takes several, if you're starting from scratch, or even if you've been doing it for a while but not being consistent, it takes a couple of years to find a niche because there are so many ways to trade and profit from the markets, so many ways to trade and lose money in the markets. Okay, and you can burn through tens of thousands to hundreds of thousands of dollars to find that niche. Personally, I know I've burned through at least $100,000 to get to where I'm at now, at least 100,000. Okay. Like I said, this is the end game. So we're basically eliminating the several years of working through it and going right to the end game. This is the strategies that we do, which work for us. And if you follow the rules as I show you how to do it, the numbers will work out in your favor. And if you have an account as small as 3,000 to 4,000, it works for you, it will work for you. And if you have an account, hundreds of thousands or more, exact same strategies will work for you, okay? So I'm gonna switch back to, now before we go any further, do we have any questions so far on anything at all? Anything whatsoever? I gave you this big picture, all right? So now I wanna talk about how we can, in our minds, think everything is going horribly wrong and lose money and by not being consistent and having a good strategy, but then faltering or second guessing it and going on to the next strategy, having a few losses, second guessing it, and ended up being nothing seems to work. Okay. And life goes on. That 2 to 4 years thing or more starts happening if you even last that long. So I'm going to switch to share. I usually do this at the end, but I decided to do this a little bit earlier to let you see how money is actually made and some mindset that might be going on. So what I did was I asked Becky, some of you have seen this, I asked Becky to put together a spreadsheet of all the currency futures trades that became valid over the last, I think, 5 years or so. By the way, we're showing 5 years, but our dates actually go back 21 years. But we did just enough so that people can see how, if we follow a plan and be consistent, how the numbers add up to work out well in your favor, and how you might perceive that your account or trading is going horribly wrong. But if you are consistent with it and you trade size properly, how the numbers will eventually work out in your favor. But you have to be consistent, have a plan, and have an expectation. You can't just feel like if you risk $1,000 on one trade and you risk 3,000 on the next trade, you risk 500 on the next trade, you risk 4,000 on the next trade. Well, when you take a loss on the one where you risk 4,000, you don't make enough money on the one where you only risk 1,000. The numbers just don't work out to offset it. So you got to keep your risk approximately the same on every trade, approximately, and the numbers work out in your favor as long as you're consistent and following a plan. All right. All right. So I'm going to take a look at is trades over the last several years. And then we're going to go back and look at a particular strategy and see how they kind of show up in a chart, at least one of the strategies. So we trade a group of strategies, not just one, but a grouping. You can't find every potential trade with one strategy. It doesn't work that way. Trading long is not the same as trading shorts. The markets do not drop the same way they go up. It's a different way of moving, and so it's a different set of strategies. All right. And I'm going to give you, let's say this is 2019, January 2019. We're risking $1,000. I'm going to use an example of a $25,000 account. This could be a 10 grand account. This could be a 5 grand account, okay? It's about percentage return on account, okay? So this is based on a 25 grand account, and I'm risking 4% of the account on each trade. If I was trading other things, I might only risk 2%, but I'll say I'm only trading these strategies in this account. I'm okay risking 4%. Okay, $1,000, 4% of the account on each trade. So these were the trades and the different strategies valid in January 2019. If I was a new trader, let's say I was the new person, my very first trade, I lose $1,000. I'm not happy. Next couple of trades, this is just first target only. This is worst case scenario. Worst case scenario. 25% return, 30% return, 43% return, 42% return, 34% return. Then I lose everything I just made again. Then I lose even more. This is my first month trading. I get discouraged. I stop because I think this program I signed up for is just losing me money. Mindset. I'm not happy with what I'm doing. This doesn't work. And most people stop trading. Most people just stop. That is why I put this together, is to give people a big picture understanding of what to expect. Because when I'm coaching people and they get a couple of losses, I have to go back to big picture. This could be your first month. And what will happen is that you tried this new program, you signed up for it, and you have all these losses, and you're like, they're not working. So what do? You stop trading it, and you sign up for the next brand new shiny program you saw being advertised out there. You saw good marketing for it. So you sign up for that new program, and the next month might be the exact same thing with the new program. Once you have something you believe to work because it's been presented to you, shown you the numbers. Okay, this month, bad, down 5%. Look what happens the next month. You're up 5%. All your losses are negated. Realistically, even at 80-something% wins, you can expect to have at least two losing months every year. At least two losing months every year. Those two losing months will be negated by two winning months. The remaining 8 months represents your profits for the year. Two losing months, almost guaranteed every year, at least two, sometimes three. Two losing months every year, negated by two winning months. The remaining 8 months is your profits. So you can't stop trading, okay? Question from Olga, what is your process from when you determine currency strategy? Need you to clarify what you mean, Olga, but what is your process from when you determine currency strategy? What do you actually mean? I'm not really sure. If you want to unmute, feel free to unmute and ask it, or write in something, and I can get back to it a little bit later on with a little more detail, but I need a little more detail there, what you mean. So next month, 5% return, 4.9. We only had 4 trades.
Sorry, excuse me.
Hey,
I always can't find the unmute.
Okay.
What I meant by your process is that you send us the strategy, then we do we immediately do an OCO order?
Well, okay, so once I email out every afternoon the trades that I find valid. Okay, and that's up to you to go over and validate them, verify, check the chart to make sure everything is correct. I do not check. It's not my job to verify all of every single parameter of trades that you might be considering taking are valid. I will do a general verification and send that listing out. Here's of the potential several dozen potential trades that could be valid, narrowed it down to 2 or 3 or 4 trades for that day. And then up to you to double check everything, which everything is right. Once you know everything is right for those trades, then we enter a one triggers 2. So your entry order, and we'll go over that a little bit more on the chart a little bit later on. So when I go over the example later on, I will cover that, okay?
Okay.
All right, cool. So after I go through this, we'll look at the charts and we'll go through just that example. All right. So years going on, we don't need a lot of trades to make good returns on our money. We need quality trades, not quantity of trades. Quantity of trades does not help us. We need quality trades. If you also need a smaller size account with bigger targets is what we do. We have a smaller account with bigger targets as opposed to taking a lot of trades with tiny targets, which means more contracts, which means more money needed to trade. So the amount of capital needed to achieve this is a lot less than if you were like day trading and needing a lot more contracts, okay? There's very little time required to do these trades, maybe 30 minutes a day to 45 minutes a day. That's about it. And that's not looking at stuff in a live market just for analysis, just place the trades. So if we scroll down the next month, March, 6.4% return. April, 0.7%. Great May, 10% return on account. This is on account, okay? This column is all monthly percentage returns. And we keep going through the year, 11% return, minus 2.8. We don't dictate to the market what to do. There are fewer trades we have in March, June, September, and December because of rollover and quadruple witching. During those weeks, we just don't trade because the charts are off, the market's off, everything is skewed. So we will have fewer trades during those times. So you will see less trades during those particular months. because a lot of losses happen during those times, so we don't trade during those times. That's probably the only way we build in fundamentals, is during those times we don't trade during rollover and quadruple witching. Okay, going through the year, end of the year, it's a 40% return on account. Okay, $10,000 made on a $25,000 account. If this was a $100,000 account, okay, with a 40% return, it'd be $40,000. If this was a $10,000 account, this would be $4,000. Okay. It doesn't matter what size account it is, it's percent return. We could be risking $1,000 per trade, or we could be risking $500 per trade, or we could be risking $200 per trade, and we just trade size accordingly with the number of contracts. So it doesn't matter how big the account is, percent return stays the same. Okay, that's 2019. 2020, COVID year. My personal single most profitable year of trading with both options and futures. This was just a beautiful year of trading. Things that make the market move, like COVID, is good for us. We want volatility, we want the market moving. And that is what we rely on, volatility and market movement. We don't want a market chopping sideways. We want the market driving. We don't care if it's up or down. We want the market moving. You find in this month, most of the trades were short. There's one long trade. The one long trade was with a loss. Everything else was short. Beautiful month of trading for us. Okay. Remember when we had that massive down move at the beginning of COVID, and then we had the massive up move right following that, but 4.9% return in January, 6% return, 4% March. We get to April, 10% return. Now, let's say you were someone who started trading the program the last week of April. Some people might have started the program here. Some people might have started the program here. Some people started the program here. And then if you're the one who started here, when you saw this great history, you're like, this is the best thing ever. And then because you started here, you got the loss and the loss and the loss because you started here. Okay. Big picture, you have to understand the big picture. If you want to get to wins, you have to get through a couple of losses. Losses happen. Not a big deal. As long as the losses are valid losses per plan, not by mistake, then it works out just fine, the numbers. All right, so a couple of losses, big deal, 10% for the month. Next month of May, 7% return on account. Keep going, keep going, keep going. We had one small losing month. October was a losing month. So we had a negative 12% return in October, and we had a plus 16% return in November. Once again, one losing month is negated by a winning month, and then some. For the year, what does it say? 65% return on account. Okay. With a 25 grand account, that came out to $16,000. You won't be in every single trade. It's not realistic. You will not be in every single trade, okay? But the percentage return is going to be pretty, if you can take every trade, this is what to expect. You take as many trades and get into as many trades as possible and just be consistent. If you're trading 100 grand account, that's $65,000. When I first started trading, people we were learning from, some of the main people were John Carter and Hubert Centers. And the thought they put into our heads, trading futures right off the bat, was that with a $100,000 account, there is no reason why we should not be booking about $50,000 of profit per year with a 100 grand account. And that seemed reasonable to us. It just took us a long time to get to that point, to find that niche, to really get disciplined enough to do that. And now we're there. So with a 100 grand account, making 50 grand a year is very realistic, and you can make a living and pay your bills with that type of account. So if you have, a lot of people do have that type of money to trade. Some people have smaller accounts, build it up over time. Same approach. All right. So great year. Now we go to 2021. Same type of trading, 6.9% return, 2.4%. Doesn't matter what it is, you just follow the plan. This one's a break-even month. A lot of trades this month, break even. Okay. And you just keep going right through the year. At the end of 2021, once again, another 60% return. You don't, from month to month, sometimes you don't realize how much money you're making until at the end of the year, or as it goes along, you start going back and you're like, wow, that's a 60% return. See someone in the waiting room there, Charles, we've got another person coming. That's a 60% return, and the money just adds up. 2022, we had kind of a sucky February and March, 2 back-to-back losing months. Let's talk about this. We put on here worst case scenario. Okay, we always do worst case scenario. This could be when you started and you see nothing but losses and losses. Every time you still think you're going to start to make money, you see more losses and you stop trading. This can happen to people. I know in 2022, this happened to some people. I know some people started around that time, and then they just saw losses and stopped trading. And it grates on you mentally, because all you see is your account getting blown out, because you see the loss after loss after loss. You think you're going to make it back, then loss after loss after loss after loss. Okay. And how do you recover from that? Understand the big picture, talk to your coach, because a lot of it is mental. I have to remind you again, the big picture. If you have to be able to understand the big picture and trust the process, trust the strategies, trust your coach, because you have to, losses can be back-to-back months, and it can be aggravating and stressful. Okay, but once you do that, the next month, 14% return the very next month in April. And that kind of negates previous 2 months. So that you offset the previous 2 months in 1 month of trading, offsets the previous 2 months of losses. It happens that quickly. It happens that quickly. Okay. You have to get through losses to get to the wins. Eventually your wins will lead to, you'll get a couple of losses, but you're going to get a whole lot more wins than losses, a whole lot more, right? So, and then we keep trading, and we go along and we go along, and end of the year, 2022, for the currencies, 44% return, because we just keep taking the trades. Remember I said these are worst case scenarios. Even earlier losses, if you follow my guide, although they're valid trades, if we don't take certain trades during certain times, some of the losses actually go away. But we want to list on here the worst case scenario. So what you're seeing here is actually worst case scenario, not best case, worst case. All these profits are worst case. All these losses are, this is max loss, but this is the minimum profit. All these numbers can be higher, but this number can't be higher. This can't be more, but all these wins can be more. Okay. The loss cannot be more than this, but all the profits, the wins can be more. Keep that in mind. All right, 2023, same type of thing. Another 58% return. And where we are in 24 right now, we've literally had like 1 loss since January. Okay. Here are the returns, and up 33% for the year since January, just trading currency futures. Keeping in mind, once again, doesn't matter what size account you have, the percent return stays the same, very consistent, and very low maintenance trading. There's a whole lot to do. I want to switch to the charts unless you have any questions for me so far. Okay. So first, let me, okay, go to the chart, 6A. Yeah. Okay. I'm going to show you the strategy that's in the handout. It's one of our short strategies. I've gone through it, I think maybe once or twice in the past. But I want you to, once again, pull out your calculator. I want you to see the numbers and how it plays out in our favor. So you're going to be doing some calculations. This is the Bollinger Band, upper Bollinger Band. Okay. I'm only showing the upper band because that's all we use. We're not using the lower band, so I didn't put it on the chart. This line is a moving average of a linear regression line. So linear regression line is on every platform. It is a moving average of the linear regression line. And squeeze indicator, it is being used, but not important for what we're doing right now for this example. So what are we looking for? So this is going to be an example of one of our short strategies. Upper Bollinger Band, what we're looking for is price to touch the upper Bollinger Band. So here we have the price touching upper Bollinger Band multiple times, but we're following this moving average of the linear regression line. And we're looking for, once price touches upper band, we're looking for this line to come down and form a V. So here is the line going up, 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 up as we touched up a Bollinger Band, going up, 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 and then it starts coming down and forms a V. What we're looking for is this first V. Okay, right here, it comes down, forms a V. That gives us a place location from where we can draw a trend line. And this is an approach learned from multiple methodologies combined. There's a combination of Fibonacci and market like wave theory. The market goes up, down, the market goes up, down, up, and then goes down again. Okay. We use that concept quite a bit in our trading. Market moves in waves. It goes up, down, reaches up, and then slams back down again. Concept we use in a lot of our trading, but this is an approach we use to be able to find a way to 100% objectively draw a trend line. So once I have this V, I can look for the previous V, draw a trend line, look for close below it, happened right there. So another way to look at this, okay, I'm looking for a V. I saw my linear regression line go up, touch the Bollinger Band. Now I'm looking for a V. Today, there's no V. Next day, no V. How long did it take to do that review? Half a second. Oh, no V. Next. Okay, goes by really fast. No V. Next day, no V. Hey, I have a V. From here on in, I'm looking. Now I have a place to draw a trend line. And I'm looking for close below that trend line. And it has to be a down day. So I'm looking for close below that trend line. On this day, I know I have a V. That's all I'm looking for. That's the whole setup for the strategy. Okay. Next day. Hey, it closed below the trend line. All right. So that's all I'm looking for. It's a very visual. And when I said end game, coming up with this didn't happen overnight. Okay. This happened after thousands and thousands of hours of analysis and back testing and what does it work on, what doesn't it work on. I mean, it's not an overnight thing, but I'm showing you, giving you the end game. We jumping right to this works, do it the way I tell you to do it. Same results you see in the spreadsheet is what to expect as long as you're consistent. All right. So if you look in data box, see ATR over here. We're using 4 decimal places, where the 4th decimal place represents 1 tick, and we're going to use a micro contract. Okay, micro contract, each tick is 1 point or $1. That's so 0.0001 is equal to $1. If it was a full-size contract, 0.0001 would be $10. Okay. The margin on this is going to be maybe 100, 200 something dollars for one micro contract. The margin for the full size would be 10 times that, $2,000 to $3,000 for the one micro contract. It's to be one full size contract. So margin is low, risk is low. So ATR on this day, look in the data box, is 0.0066. Write that down, 0.0066. 0.0066. What is 1.3 times 0.0066? 1.3 times 0.0066. Please type it in. 1.3 times 0.0066. That's 1.3 times the ATR. 1.3 times 0.0066. Someone type it in. That's going to be how big our stop loss is, how many ticks our stop loss is. 1.3 times 0.0066. Need someone to do the calculation and type it in chat box. Okay. And I got 0.0085, which is 85 ticks. Okay. 85 ticks is how big our stop loss is. It's 1.3 times the ATR. ATR is average true range. It's a measure of volatility of the underlying instrument. I use a 5-period ATR. What that's telling me, approximately on every 5 periods, every 5 days, on average, Australian dollar is moving 85 ticks. I'm going to be basing my stop loss is going to be based on the underlying volatility of the ATR and a percentage of the ATR as a first target. And then we'll see what percentage that is of in actual dollars and cents. Now, what is 60% of 0.0066? 60% of 0.0066. 60% of 0.0066 is what? %60 of 0.0066. Type it in. And that's going to be how big our first profit objective is. 39 ticks. Okay. 39 ticks is the first place where we take profit. That's how big we want to move in our direction to take profit. All right. Now, we're going to enter this trade 10 ticks under the low. When we're going short, we do not get short a futures market unless the price is actually going down. And we don't go long unless the price is actually going up. So we use a sell stop, which gets us into the trade when the market goes at least 10 ticks under the low. Then we enter the trade. Or if it goes 10 ticks above the high of the signal day, the day we get a trade signal, if we're doing long. If we're going in a long trade, it has to be actually going up. Okay. So the low this day is, look in the data box here, the data box high, low. The low that day is 0.6691, which means our entry is 0.6681. So we're going to enter this trade when I'm going to type in the data box, 0.6681 is entry. 0.6681 is the entry, which is 10 ticks under the low. The low is 0.6691. We're going to enter the trade at 0.6691. Okay. What is 0.6681 minus 0.0039? 0.6681 minus 0.0039 is what? That's going to be our first profit target. 0.6681 minus 0.0039. Again, 0.6681 minus 0.0039. That's going to be our first profit target. 0.6642. Okay, thank you, Olga. So that's our profit target, 0.6642. Now our stop loss is 0.6681 plus the 1.3 plus 0.0085. So what is 0.0085 added to 0.6681? That's our stop loss. 0.6681 and add 0.0085. .6681 and add 0.0085. 0.6766. Okay. So we have our entry price, which is right down here, is 0.6681. We have our first target, which is 0.6642, which is right down here. And we have our stop loss, which is 0.67 whatever up here. Okay, this is all the trading plan. This is all, you don't have to make this stuff up. It's all laid out for you. For every strategy we do, we have entry, target, stop. We have exactly what entry criteria is, stop loss criteria is. Okay, so our stop loss is 85 ticks. Remember we said earlier, micro contracts on Aussie dollar is $1 per tick. So if it's 85 ticks, that's $85 risk on one contract. Okay, if we take a full loss and it goes against us 85 ticks, we're going to lose $85. Now, if we want to risk $1,000, how many contracts can we get? If we want to risk $1,000, how many contracts can we get? That would be $1,000 divided by 85. Because if every contract is risking, so what's 1,000 divided by 85? Okay, 11. So if we wanted to risk $1,000, that's our established risk, we can trade 11 contracts. So we have our entry, we have our profit target, we have our stop loss value, and we determine how many contracts we're going to trade in order to stay within our risk, whatever our risk is. If our risk was $100, we can trade one contract. If our risk was $200, that's what you want to risk per trade, then we only be able to trade two contracts. Okay. So let's look at actual dollars and cents and percentage returns. If we have a win of 39 ticks, that's our first target, that's $39. And if we have a loss, we're going to lose 85. Remember, we have 85 to 90 something percent winning trades. Okay. So what is $39 divided by $85? What's that percentage? So if we have our first target win, we make 85, we make $39, we risk 85. What's our percent return? What's 39 divided by 85? Divided by 85 is what? 45%? Is that, I'm assuming that's what you mean? Sanjay? Yep. So that would be a 45% return at the first target. This is how we trade. Now, to enter this trade, there's no sitting around looking at the computer all day long. That's nonsense. That's once again, that's how everyone starts. Everyone starts doing that. But as time goes on, do you see the people who make really big dollars sitting around a computer all day looking at? No, they either have people doing it for them or they have things that make them money over time. They don't have to sit at a computer. This is where we're at, once again, the end game. It takes minutes each day to do our review, and plus I'm emailing out to everyone anyway. So how we would enter this trade: one triggers two. Order. The entry order is, let's say I'm doing 11 contracts. Let's say I'm doing, let's just say 11 contracts. Sure, 11 contracts. I would say sell 11 contracts with a stop order. Sell stop 11 contracts at, get the pricing in, at 0.6681. Good till canceled. So my entry, one triggers two. The first part of the order, sell 11 contracts, 11 micros. Sell stop, sell with a stop order. So you only get into the trade if it goes below that price. Sell stop 0.6681, 11 contracts. If and when that order is filled, then create a one cancels other bracket order where one order will be a stop loss and one order will be the first target. So if the stop loss is hit, the first target order will be canceled. If the first target order is filled, the stop loss order will be canceled. And this order has 2 days to be filled. So here's when the trade's valid. After 2 p.m. Pacific, well, market opens at 3 p.m. Pacific. After 3 p.m. Pacific, you place your order. A whole day goes by, your order is not filled. During this time, there is nothing to do. There's absolutely nothing to do whatsoever. Nothing to do. You just place your order and you walked away. Nothing to do. Sometime between 24 and 48 hours later, the market spikes down, hits your entry price, and you're filled on a trade. Your stop loss is up here. Your first target is 0.6642. So it hasn't been reached yet. Your first target is right about here, 0.6642, somewhere right about here. So trade's valid here. Place your orders sometime that afternoon, preferably right after the market closes. So the market closed at 2 o'clock. You have your data a little bit after 2. Sometime that afternoon, you place your order and then you go live your life. More than 24 hours later, the order is actually filled. Nothing to do. You'll get a text or email notification your order has been filled. And then another day later, you're still in the trade. Nothing to do. Nothing to do. You're still in the trade. Another day later, cha-ching, your target is hit. Shot down, you got your 45% return on your money, and life goes on, business as usual. If all you want to do is carefree trading, this is carefree trading, all in, all out. If you're the type of person that has the time and desire and you want to try to make more out of this trade, then you would have 2 sets of orders, one for the first target, and after the first target is hit, you move your stop down on the remaining contracts and try to trail the stop and try to milk it for a little bit more, but that requires time and effort each day. Some people don't have it. Now, there's a potential to make more money because this kept going down. So the potential is there, but that requires, once again, more time and effort. And you're going to be, on some trades, you're going to give back profits on the remaining contracts. Some trades, you're going to get more profit. So is it worth it? Up to you. I, in most cases, just grab my 40-something% return. Remember I said we average on the low end about 40%. Some a little bit lower, some a little bit high. This one's higher because at 45%. Some might be 35%. This is an example of how we trade. The listing in the handout where I show all the trades for this strategy over the last 20-something years. This is literally how we do it. It's the exact same strategy. It's the same approach. I can scroll back to, okay, it hits here we have the price touching the upper Bollinger Band. We have a V down here. It forms a V. So we do that, boom, 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 and we draw the line type of thing, okay? It has to be a higher V, it can't be a lower V. because it's going up. Same thing. Touches upper Bollinger Band, forms a V. Look for the previous V. Boom, boom, forms a line, closes below right there. And here we go. Touches upper Bollinger Band, forms a V. Look for the previous V. Draw the line. Closes below right there. So it's a pretty straightforward strategy once you start doing it, but it's one of a group. Okay. Any questions on this at this point in time? Just because I wanted to see how money's made, how it starts to add up, how it's not that difficult. But it does require someone showing you how to do it. And what we do is a grouping of strategies. And I do have that actual, let me pull up here. I just want to show you how an actual trading plan looks like. Let's see if I have this here. So in a second. Yeah. Okay, here it is. So if I futures trading plan. So remember, I showed you this at the beginning. That's one of the old strategies, which we might bring back to life. You might see a futures version of this real soon. But as an example, here would be the full version of the strategy with all the rules laid out, the trading plan. It tells you which chart template to use, the last update of it, what we trade with this strategy. There's certain times we don't trade. It's all laid out. When to not trade. When to not trade is real important. Like said, we don't trade valid on quadruple witching week, certain times, and rollover week. So when to not trade is important. All indicator settings, which you will need. If you were doing it by scratch, by hand, then all the settings are here. But when I work with you, I will give you all the indicators. I will give you all the settings. Everything is set up for you, ready to go. Okay. I will hand you everything ready to trade, ready to do your analysis. You don't have to do this stuff yourself manually. I will hand this all to you. I got the rules for drawing the lines. Everything is laid out. So this is an example of a trading plan. Everything laid out for you as a reference. So I go over words with you. You can't even try to read this and understand it on your own. It ain't going to happen. Okay. But once I go over it with you and then you go back and read it, then it'll make sense. And then we have the entry criteria for each of the currencies. And then importantly, the actual stats for the different currencies. So I already know when I trade Aussie at 90% wins, this number is the P&L. It means dollars made for every dollar lost. 3.85 means over the last 21 years, it's made $3.85 for every $1 lost. Okay. Canadian dollar, 84% wins. It's made $2.40 for every $1 lost. So it's important to have these numbers to know what to expect. And so when you see the listing of trades that in that spreadsheet, those were all trades at 80% wins or higher. We want some cushion. 75% is where we are profitable. We want more cushion. So we look at 85%, excuse me, 80% is the minimum acceptable for our currency futures trades. But it'll be just like this. I'm going to switch back to the handout and then answer any questions. 1 second. Two. Yeah. Okay, a question here. So this strategy is looking for when the trend is changing, correct? We're waiting for the V, first indicator the trend might change, and the getting in once it's confirmed by entering after closing below the trend line you drew. Basically, yes, it's using trend line as an approach to trade. I'm going to switch over to the chart just to answer that question. The answer is yes to that question. For a bearish move, we're looking to draw an upward trend line and look for a close below it. The squeeze is being used to confirm the trade. For a bullish trade, which we're not doing with this particular strategy, we'd be doing a downward type of trend line and looking for close above it. We use that for index futures. So we use a similar, we don't use the same strategy for long and short, exact same strategy for long and short. But a concept we use in a lot of our trading strategies is the market moves in waves. It goes up, it comes down, cycles up, and then slams back down. This type of movement happens all the time. Up, down, a retrace, boom. Okay. What we're doing is this same type of thing, but we want this to touch the upper Bollinger Band. Why? Because it eliminates a lot of this type of stuff, the sideways stuff. We eliminate a lot of that type of sideways stuff by letting it go to a peak point, then come down and retrace. So this is the pattern we're looking for. Up, down, retrace, and it revert to slam back down. So if this had touched upper Bollinger Band, this line would have been drawn right here. Close below, trade. But we wanted to touch upper Bollinger Band. It's a simple concept of market movement that's true, and it's been around for a long time. And the market is moving in waves like that. And a lot of our strategies rely on that type of movement and analysis. And we just find certain ways to capitalize it based on methodologies learned from many, many people. If you go back and watch on my YouTube channel some of the videos from the last couple of presentations, let's put a link on there again, you'll see some of the people I've referenced who we've learned from, but it's a lot of knowledge gained. And even doing Gartley's. Who was the guy we learned Gartley's from, Becky? I'm blanking on his name. Who did we learn Gartley's from? I can't think of his name right now. A big part of this comes from him. Gartley's. Becky, what's his name? If you can remember, type it in. What's his name? Like we did a lot of Gartley trading and patterns like this, visual patterns. And we literally never had a loss. We used to trade Forex using Gartley's and just big picture, just draw literally this type of movement. A big up, a retrace, right back down. And we traded just that with Gartley's, and it was beautiful trading. We didn't even need any indicators, nothing like that. But since I started coaching people, for coaching, we need to be able to show people stuff that's more objective and not just vagueness and might see it. No, we needed people, something that's repeatable. That's why we focus this for our trading clients, because it's repeatable. Gartley is Gartley. Gartley. I have software, meaning profit source software, that actually looks for Gartley patterns on charts. So it makes it easier for me, but if you don't have that software, then it's something we can't really show you. But this type of pattern trading is just awesome because it happens all the time. Market moves up, retrace, slam back down. Using the trigger lines gives us a way to visually see those movements a lot easier and work with it. So the trigger line worked for us really well to give us some architecture for it. All right. Any questions? All right. So I want to see, what time is it? Okay, just a few more minutes. I'm going to go back to, I know Becky hates when I do this because it brings up some of the bad times. But this was our worst trade ever. This was in 2008, and when we did everything totally wrong, even though we knew what the right thing to do was, we just lost our minds briefly, and everything just went bad, really bad. All right. Using the same strategy I just mentioned. Boom, boom. Touch upper Bollinger Band, forms a V. Draw the trend line. Okay. This was in 08. In 08, myself and Becky were trading pretty good sized trades. Okay, we're talking pretty good sized trades, just booking money left and right. It was beautiful. We didn't have any losses. We just didn't take losses. Okay. We knew what to do. We knew exactly what to do. We knew our entry. We knew our target stops, everything. But we had never actually experienced taking any kind of significant loss until this time came up right around here. And we were long, good size position, because we were trading good size trades then. And then we got a sell signal, but we were long. And if we, so the market started going down, and we didn't want to take a loss on the long trade, so we moved our stop. So we were long here because we had another buy signal. We were in long. Okay, we were going long, and then we got this sell, but we didn't take the short signal. We figured, we didn't want to take a loss, so we moved the stop down from where we had it, figuring, the market will come back, will come down a little bit and then retrace up, and then because this was a pattern, we were going down, up. We figured it would just keep going up because but that's when all that bad news started coming out in 08, and the market kept going down lower. So now, instead of going short like we should have gone, we were still long, and now we went from being positive to being negative because we moved our stop. So now our bigger than expected, so we would have taken a couple of $1,000 loss on per contract, and it would have sucked. We didn't want to do that, so we moved our stop. So now our loss was even bigger. Okay, so we did all the stuff that they tell you not to do. We moved our stop. We started drawing. Well, on the weekly chart, we have support like right here. So it was going to stop there. It stopped there for like a day, and then kept dropping again. Well, on the next level weekly, next level monthly, and all the hoping, everything just, but we were so deep in the hole right now, we think, okay, it's got to stop eventually and bounce back up. It didn't stop. It didn't stop. And it didn't stop. And it was the single biggest drop in the Aussie dollar ever. This was the last time we both got our accounts blown out on one trade, Aussie dollar. Okay. If we had followed our plan and did what we were supposed to do and taken our stops when we were supposed to take our stop and then go the other way, it would have been our best trade ever, because we had our sell signal, but we just didn't want to exit another position. We were all set up. We were actually positioned with two accounts, one to go long, one to go short. We had it all set up nicely, so we could actually be long and short at the same time if we really wanted to be, but we didn't want to take a loss. And we did everything wrong, even though we knew what the right thing to do was. But adversity can beat discipline into you, basically. And that's what this trade does. We look back at this and it's like, what were we thinking? We knew what to do. We knew what to do, and we just did the wrong thing because we didn't want to take a loss. But the plan was in place. We knew our risk. Everything was set. We didn't really do much different than we do now, except the discipline part. But since then, I know I've not blown my account out, and I don't think Becky has either, but this was it. This was a turning point for us because we look back and it's like, what were we thinking? This could have been the best trade ever for us on the short side because we had multiple sell signals, but we had no money left to trade it. Even after we got out, we had no money left. We couldn't trade. And then margin went up massively. We couldn't trade anything. Margin killed us. So we were done for a little while. That's when we switched to Forex and then started over basically with Forex. Same strategy, same trades, just with a lot smaller trades. And then as time gone on, we just built back up. But now I would love to see this again. We know exactly what to do. I mean, this is a money maker. It's literally the strategy. Touch up a Bollinger Band, form a V, draw the trend line, sell signal, cha-ching. Drop all you want, because remember, this drop, it never pulls back to stop you out. So if you had other contracts going on, we filling a stop on, there is no retrace. This dropped thousands and thousands of ticks. This is thousands of ticks it dropped. It's not just a 50, 60, or 100. This thing went from what? 9651 to 96 to 666, 3,000 ticks. Okay, what's 3,000 ticks times $1 is $1 per contract, or 3,000 ticks times 10. We were trading full-size contracts, by the way, back then, so you can get a feel for how much it hurt. We weren't trading micros back then. They were full-size contracts at $10 a tick. It hurt. Right, but we recovered, and time goes on. We didn't stop. We knew we did just do the right thing, and it works. Follow the plan, it works. So let's see. Okay, I got a question. This was a time when everything must have dropped. Yep, that was the 2008 market collapse when the market dropped 50%. And that's when we stopped trading spreads on options and went to directional trading only. That's when we focused on pure directional trading. That was the turning point for us, but that was the last time we had an account blowout. So, but how we trade now is really how we were trading then. It's just that the discipline part didn't kick in till after this kicked our butts, and it beat discipline into us. But now we don't do that again. We follow the plan. The plan works. It hasn't really changed that much in all these years, but it works. Very effective way of trading, the way we went through the strategy before, and the P&L, that's what we see on a pretty regular basis. Any questions? All right, so you're gonna find this on in your handout and also on our website. So anyone who is interested in learning all the strategies, I do everything one-on-one. I don't believe in the group coaching deal. So we don't do the ES with this thread to the person that yeah, we do not do the ES with this strategy. We do the ES with different strategies. Okay, so this particular strategy we're looking at is for the currency futures. Let's switch off here. Can you have a moment? For the ES, we have different strategies which we use. Right now, it's still pretty bullish. All right. We might see a sell signal sometime soon, but right now it's just pure bullish, at least for the time being. Question, have you had any swing futures trades? Swing futures. When you say swing futures, can you define what swing futures means? I'm not sure what you mean. Swing futures trades. Is that one of the strategies you're talking about?
Well, what I mean is that you can look at ES, for instance, and had you entered in December of last year, the trend was up. Had you gone into a swing position, then you'd be holding like one mini I mean micro ES, and you'd be holding it since the beginning of the year.
So everything we do is options. Maybe for the futures, we don't hold anything. It's when a target's hit. For options, is a definite maybe.
Oh, okay, because you have up there futures swing trading program. So I thought that that there is such a thing.
Yeah. So this is the futures is the one you're already familiar with, those strategies, the one you have the plan for. So it's all of those strategies.
Okay.
So it's the ones you already have. For the end of the year, end of the last year was picture perfect. We had but it was a beautiful trading for our option strategies, because from the seasonal pattern point of view, we got our buy signal exactly when we should have gotten our buy signal. Remember the end of year deal with the bullish pattern? So the end of year last year was picture perfect, go long, basically, starting in October. It couldn't have been any better. So that worked for literally all of our option trades. It was just so beautiful last year. Hopefully you got some of that last year. But yeah, this strategy for the TNT 52 is focusing on the currency futures. For the options, like I think last month I said for like this month of June, we would be focusing more with options than futures. Take a look at how the futures market is moving. I mean, on Aussie, it's more chopping sideways, right?
Yes.
That is why we focus on options in June, because of the rollover and quadruple witching is just this type of stuff, and you end up getting stopped out needlessly. So that's why I sent that message out last week. If you want to trade, you trade at your own risk. The smart trade to do is to not trade until after rollover and quadruple witching, because this is the kind of stuff you get into. It's getting chopped up. You get a signal, get chopped up, get a signal, get stopped out. So after this weekend is when we get back to regular trading, because we passed rollover and quadruple witching. And then we get, but this is what you get kind of caught up in during those weeks. Our option trades are still great. But doing it with the futures, since we have stop losses, we don't want to get messed up with stop losses. Needless losses. That's why even though that spreadsheet I put out, some of those losses won't even happen, because if you just don't trade during rollover and quadruple witching, just don't trade at all, some of the losses go away. So those results even get better by not trading during those times. All right. So I'm going to switch over to my website. So there's the best time I always tell people to trade literally is coming up in like the September through April type time frame, whether it's options, futures, or whatever. This year we've had a great year for futures no matter what, and for options. But if you're not been to my website, pay to visit. Coaching special ends in 2 weeks. This is probably the biggest discount I've given in a while, but we've got a lot of attention since I started showing the currency futures specifically, and also the options with focusing on indices and breaking it down. Right now, I am sharing the website. If you go through a little bit about me, the podcast I was interviewed for. I didn't know what to expect, so they just asked me whatever they wanted to ask me, and I answered whatever they wanted, I just unrehearsed, so it is what it is. A couple of videos. These are the sectors we trade for options. A couple more videos for options and futures. This is a short I did because one of the people I was working with on options, they told me they only wanted to trade Qs and nothing else. I'm like, is that all you want to trade? How do you want to get a lot of trades? They didn't care about a lot of trades. They just want to trade one thing. So I put all of one symbol on one chart for 1 year. And it's 40-something trade, 90-something% winning trades. And all they want to trade is one thing, and then nothing else. That's all they want to trade NASDAQ. And so I put this on here a while back just so people can see what it's like to just trade one thing and focus on one thing. And you can see the last couple of recordings of our meetups, you'll see that type of thing too when you sort out the information, what to expect. If you want to work with me, contact me as soon as possible so we can really get rolling to be ready for the fall. The fall is when markets really start trending, so we want to be ready for that. If you're interested in doing the futures with me, message me using the form at the top, contact us, or the form at the bottom of the page. And I guess we can set that up. If you want to ask any questions, I can go over that with you. I want to make sure you have clear, concise expectations. This has been really great for me doing this type of stuff because it frees up my time. I stopped having a regular full-time job in 2009. I've been focusing on trading and doing other things. They kept telling me at Lockheed where I worked, well, when I retire in 30-something years, I'll have time to do what I want to do. I don't want to wait 30-something years. So I do a lot more fun stuff now. Trading only takes me a half an hour to 40-something minutes a day at the most, usually less actually. But now I have the time to do other things. I do a lot of training in Brazilian Jiu-Jitsu. I teach kickboxing and other classes. A couple of weeks ago, I was hanging out with Channing Tatum on a film we're shooting up in San Francisco. Next weekend, Saturday, I'm going to be in another film as a referee for a basketball game starring Steph Curry. So Steph Curry will be playing in the game, and I'm going to be reffing the game. That is going to be a film, so I take on a lot more acting roles. So I do a lot more fun stuff like that. I'm also, as soon as I end this meeting at 3 o'clock, I'm meeting with someone about potentially running for city council this fall in the city of Santa Clara, having a formal election process and getting on the ballot. So just stuff like that just takes up a lot of my time, doing other things that I enjoy that I can't do if I'm sitting with a full-time job. So by having trading to supplement my income, this in some cases replacing my income, especially in 2020, this has been beautiful for me, especially the currency futures. That's why I focus on the currency futures. They are the most profitable, and that lets me do more fun stuff like I just talked about. I got other city stuff coming up. Got to be at a concert this Friday night. I got to be on stage at the Art and Wine Festival in the 4th of July weekend. I have to be on stage with the mayor and other council members for opening ceremonies, and because we're hosting the 4th of July event at Mission College with the fireworks at Great America. So all type of fun stuff I wouldn't have time for if I had to work a full-time job. So trading is what gives me that freedom to do all type of fun stuff that most people don't get to do because they have to be working all day long. So like I said, if you are interested, please contact me. I do everything one-on-one. That's the normal cost. That's the discount. And I don't care how long it takes. If it takes you a month to learn everything, great. If it takes you 6 months, great. I need you to commit 3 to 6 months to learn the systems, place the trades, and make it become second nature, because you got to be able to experience the highs and the lows. Lows will happen, as an example I showed, but you got to go through that and come out the other side, end game. Okay, so let me know if sometime this week, and I can set up a time to meet with you and set up a time to get this going. And because I really do love teaching, I love trading, I love doing analysis, and it's changed my life. So hopefully I can help you change yours too with coaching and learning the future strategies and maybe even option strategies. If you don't have any questions, let's go ahead and end this meetup, and we're going to meet again next month on July 14th, I believe. And to answer Olga's question, yes, I have to campaign for those council positions. I should have been on council right now with an appointment, but my appointment was blocked. This was in 2017-ish. My appointment was blocked by 2 council members. It was a political play because they wanted to keep that seat open for another person who was running later that fall, hoping that person would get onto council that would favor their positions, because they thought that my position on things would favor some other council members. So it was a political play that kept me off council, but I could have been and should have been on council right now. So local politics is more brutal than even national, but for some odd reason, I still want to be involved with it. Some odd reason. I like the punishment, I guess. I don't know, but I'm still find it intriguing, and if I can make a difference, I'm gonna make a difference. But that's the fun stuff I do when I have the time. All right, until next month. And for that question, what trading platforms do you suggest? We do our analysis on NinjaTrader. It is free to use. Email me, call me, and we can chat about it. And I give you a few options on what platforms and how the differences are and pros and cons of each one. All right, you know how to reach me. My phone number is contact forms there and also on the handout. All right, talk to you all soon. Thanks.